Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. The US Treasury Secretary Scott Bessent says President Trump is not calling for the Fed to cut rates, with the focus instead on bringing down 10-year Treasury yields. Fed officials call for clarity. Donald Trump's aides look to tone down his call for the US to step and own the Gaza Strip, calling it an out-of-the-box idea. Plus, the Bank of England looks set to cut interest rates for a third time today, but official growth and inflation forecasts are both expected to move in the wrong direction. Well, a very good morning. Welcome to the programme. And we kick off with breaking earnings from Volvo Cars. The fourth quarter operating income coming in at 3.85 billion Swedish krona. The estimate was for 6.02 billion Swedish krona. So a miss there. Volvo says that the margin's been impacted by volumes, investments, extra costs, and Volvo saying that it sees 2025 China duty market. Truck market, 710,000 units. Fourth quarter adjusting operating profit coming in at 14 billion Swedish krona. A slight miss. 14.5 billion Swedish krona was the estimate. But they still see 2025 seeing American truck market demand 300,000 units there. So we'll come back to Volvo later in the programme. We're going to be speaking to the CEO about those earnings. Volvo Cars very much in the firing line for Donald Trump's economic policy, of course, given it's a European car maker, but also has a Chinese majority owner in the form of Geely. We'll be speaking to Jim Rowan later in the hour. But let's check in on these more broad markets now. We have seen a choppy session yesterday, and we've got futures pointing higher on both sides of the pond now. In Asia, a broadly higher session, up 0.25% on the MSCI Asia Pacific Index, so taking a bit of a breather. That's actually around the highest since December the 18th now. But if we flip the board, you did see Treasury yields falling to 2025 lows yesterday, off this weaker than expected service sector data, adding to concerns about economic growth in the US. So the 10-year Treasury yield currently at 4.4%. That is what Scott Bessent says he's got his eye on. Gold, you can see, benefiting from the flight to safety, but only a touch stronger now. Brent at $74 a barrel, weighed down by that tariff uncertainty, but eking out gains this morning. And we have cable at $1.24 as we head towards that Bank of England decision at 12 p.m. London time. The spectre of stagflation hanging over those forecasts. Let's get a check, though, now on Asia markets and how they're faring. We've got Avril Hong on standby for us in Singapore. Avril.
Yeah, Lizzie, as you say, Asia markets in a pretty good mood today, and some of this is tracking Wall Street's gains. But look at how Chinese shares are also enjoying a bit of a bounce today. Robotics, AI stocks are doing well, but we also had holiday spending data showing Chinese consumers splurging in terms of travel, movie attendance records. So that's helping to lift the mood a little. Among the other factors that are helping to fuel the climb in Asia stocks today, the earnings story. We are more than halfway through reporting on the Nikkei 225 firms, and they've mostly been beats rather than misses, coming especially the biggest beats from the consumer discretionary, the financial names. Today, we have the likes of Renesas chip maker, massive surge there after its earnings beat. So that's helping to lift the gauges in Japan. And this all coming on a day where the Japanese yen, as you know, has been climbing. But you know how that is also typically an uncomfortable backdrop for Japanese equities. Some of the climb in the yen this week against the greenback has been the step down for the US dollar. But also we got fresh commentary from a hawkish BOJ board member today. So that's fueling the yen bulls. So yen gaining, stocks also doing pretty well in the Asia Pacific, Lizzie.
April Hong, we thank you with that update on Asia markets. Now, we also have breaking earnings from ING, the Dutch bank, of course. A focus here on net interest income, and that comes in at 3.68 billion euros. So a slight beat here on net interest income. We also have fourth quarter pre-tax profit of 1.77 billion euros. They say there's been outstanding commercial growth, and we have loan loss provision also coming in at 299 million euros. The estimate was for 355.3 million euros. I'm pleased to say we can discuss all of these results now with the ING CFO, Tanate Phutrakul, who joins me once again on Daybreak Europe. So good to have you with us, Tanate. Let me just ask you about your expectations then on net interest income and your costs going into 2025 as we digest these results this morning.
Thank you very much, Lizzie. Nice to be here. I think I just wanted to say at the beginning how we're pleased with our commercial results for 2024. We added 1 million new primary customer. Loan growth and deposit growth was strong, and our fee income was exceptionally high at 4 billion euros, a franchise record. And I think our credit book remains resilient with a low non-performing loan ratio. And that has resulted in a strong profit and a strong return on equity. And as you know, we're in the middle of a share buyback, 2 billion euro share buyback. And based on that capital strength, we have also announced a further dividend payment, our final one of a further 2.2 billion euros. So generally pleased with the results that we have at the moment.
OK, so to be clear, can we expect ING to keep up the pace of 2024's buybacks?
Well, we plan to converge our capital ratio to around 12.5%. We normally announce any capital action with the results of our first quarter in May, and we expect to make some announcement of what we will do in 2025 at that time.
OK, one of the big questions, of course, hanging over European banks is really how you're going to handle the turn to rate cuts from the ECB. How do you expect mortgage growth panning out with rates coming down?
Yes, I think rates are already coming down, and we gave an outlook at our results that despite having historic high revenue numbers in 2024, we expect our revenue numbers for 25 to remain around that figure of 22.6 billion. And as rates come down, this stimulates mortgage production. We already saw very strong mortgage production in 24, and we expect that continued strength in terms of mortgage production to continue for ING going into 2025.
OK, and as the Netherlands' largest lender, I do have to ask you how you expect Donald Trump's tariffs to affect not just the Netherlands, but ING as well.
Yes, well, tariffs are not good for economic growth, and certainly Europe will be affected by that. But having said that, ING has a diversified franchise operating in the US, Europe, and Asia. So we have many opportunities to find pockets of growth. And European growth has not been strong already in 2024. And yet we managed to grow at a pretty good pace, increasing our loan book by 27 billion euros during the course of 2024. And our outlook for 25 is to do the same, that we expect our customer growth to be approximately 4% in terms of lending and deposits as well in 25.
And Tanate, where you don't have operations or soon won't, will be Russia. I'm told you're expecting a profit hit of 700 million euros. When do you plan to take that hit?
Well, first of all, we have been reducing our exposure to Russia since the beginning of the war. So we're down in terms of our lending exposure by 80% since 2020, 21, 22 when the war broke out. And we expect that the transaction will close in terms of the sale of our subsidiary in Russia by Q3 this year.
OK. Chief Financial Officer of ING Group, Tanate Phutrakul, always good to talk to you. Thank you so much for joining us. Now, to other news this morning, the US Treasury Secretary has denied that Donald Trump is calling for the Fed to cut rates, saying instead he's focused on lowering 10-year Treasury yields to keep borrowing costs down. Scott Bessent was speaking in an interview with Fox Business, and we can get more now with our Bloomberg MLive strategist, Mark Cranfield. Mark, good morning. I have to wonder if Jay Powell's heaving a sigh of relief about this. What does it mean for bond traders that Bessent's focused on the 10-year?
Good morning. Well, I think bond traders are taking this with a large pinch of salt because which president wouldn't want lower long-term Treasury yields? I mean, that's pretty much par for the course. But what actually drove yields down yesterday was the Treasury quarterly refunding announcement. Now, in that, the Treasury pretty much committed themselves to not increasing long-term issuance of bonds for quite a long time, probably throughout the rest of this year at least. Now, that is pretty significant because when it was clear that Trump was going to become president, people were pretty concerned that the deficit may grow and that they would use long-term borrowing to help to finance. Now, it looks as though it's going to be shifted more towards the shorter end of the yield curve, and that's partly why yields are starting to come down. Also, expectations that maybe inflation won't be hit quite as much as initially thought. So bearing that all in mind, what we've seen really happen in the past couple of weeks is a significant flattening of the yield curve, driven by the long end coming down faster than the short end. So that's really more to do with what Bessent is saying in terms of where the number of bonds that will be issued over coming months is coming. It's really got nothing much to do with whether you're talking about the Fed or the president or anything like that. It's actual demand for bonds in relation to the issuance. Should that keep going, if the Treasury keeps to their promise and maintains the funding as a light exposure in that long end, yields may well come down further again, of course, depending on the direction of inflation.
OK, but meanwhile, of course, we've had all these Fed speakers calling for more clarity on Trump's policies. Let's just take a listen to Richmond Fed President Tom Barkin.
You mentioned tariffs, but deregulation, where is it going to hit? Where's the tax plan going to come out? What's going to happen to net migration, energy policy, geopolitics? I think there's just a lot of uncertainty in the air, and it's very hard to know what's happening with growth and employment, what's happening with inflation, until you get a little more clarity on all of these uncertainties.
So Barkin bemoaning the uncertainty. What are traders reading from the recent Fed commentary, Mark?
It's a pretty consistent message from Fed speakers recently that they all want to see more data, take more time. They held rates steady in January. They're indicating that they're in no rush to make any changes. They want to see how the new policies develop from the Federal Reserve, from the White House, what's the impact on the economy. So in effect, we're going back to the data-dependent outlook from the Federal Reserve, and we've got a couple of really big ones coming up. We've got the US jobs report tomorrow, followed by a CPI report next week. Probably over the next couple of months, it's the inflation numbers which will become increasingly important. That is the one where people think there is the risk of an upside. After inflation steadily coming down last year, we may have reached a bit of a base, and now with the risk of lower taxes and an expansion in the economy, there could be some upside to inflation. So those numbers over the next couple of months will be extremely important. Inflation numbers always are, but maybe they carry even more weight than the jobs numbers over the next couple of months. And so by the middle of next week, we'll have a much better picture on what the Fed can digest in terms of where the data is telling them how long they can stay on hold and whether they can start to even think about interest rate cuts later in the year. The market thinks one more cut in the second half. Let's see whether it's justified. Over the next couple of days, we'll get a much better idea.
Mark Cranfield, Bloomberg MLive strategist, we thank you for that analysis. And we're going to get a lot more from Scott Bessent later today. The US Treasury Secretary joins us live at 6 p.m. London time. So that is not a conversation you are going to want to miss. But staying with central banks, later on today, we're going to have a Bank of England decision just across the road. That's at 12 p.m. London time. The expectation unanimously among economists is that we'll have a 25 basis point cut. It's almost fully priced in by markets. And the reason, of course, is that here in the UK, say the economy is somewhere between the US and the euro area, not just geographically, but economically too. We've got weak growth, but we've also had that pickup in inflation recently. The only member expected to dissent here is Catherine Mann. So it's expected to be an 8-1 split. Mann voting for a hold, same vote split as at the November meeting. But if we saw her voting for a cut, that, of course, would be read as a dovish signal by the market. Also, if the Archdove of the committee, Swati Dhingra, voted for a jumbo cut, that would be read as a dovish signal. But really the focus on the forecasts today, the expectation being that there will be a downgrade to the growth forecast, an upgrade to the inflation outlook. And that is going to be, I should note, based on an outdated market curve. So a tricky communications job for the Governor Andrew Bailey. He's either going to have to push back on market pricing or appear to be criticising the Chancellor's budget. But embarrassing, perhaps nonetheless, for the government, given that its top priority is growth, and this payroll tax rise in the budget may have added to inflation more than the Bank of England initially thought. Of course, Reeves will also be watching these forecasts very closely for clues as to how much headroom she will have later in the year. That's officially the Office for Budget Responsibilities responsibility to decide, but this will give her a clue as to whether she needs to cut spending, raise taxes, or break those non-negotiable fiscal rules later in the year. Lots to discuss. We're going to be talking about it all with HSBC's Global Chief Economist Janet Henry later this hour. You don't want to miss that. And we'll bring you full coverage of the Bank of England's decision when it drops at 12 p.m. London time. Viewers in the UK can see full coverage of the news conference with the Governor Andrew Bailey at 12:30 p.m. London time. And at 4 p.m, we'll bring you Andrew Bailey's interview with Bloomberg's Guy Johnson. But coming up right here on Daybreak, signs of falling support for the favourite to become the next German Chancellor. We'll bring you all the details next. This is Bloomberg. The German election now, and a new poll has shown a fall in support for the Conservative alliance led by Friedrich Merz. It follows a disputed vote in Parliament in which the favourite to become the next Chancellor relied on support from the far right. Let's get analysis now with Bloomberg's Oliver Crook. He joins us from Berlin. Ollie, take us through this latest polling.
Yeah, so listen, Lizzie, let's just recap quickly what happened last week. This is sort of big gamble by Friedrich Merz. It was voting with the AfD on this immigration reform bill that the CDU proposed. And that's the first time that has happened basically since the end of the Second World War, where a mainstream party has voted with the AfD. This, of course, came with a lot of shock to the centrists who support the CDU, those sort of that constituency. But also, and obviously this is sort of without sort of recent precedent in history, but it was also a very poor showing because even for those who thought he was being a bit pragmatic and dealing with the fragmented landscape, the vote didn't even pass Parliament because he couldn't get his own party in line. And the consequence of that, as you'll see from the polls right there, is the CDU coming in at 28%. That is a 2-point fall from the latest polling that we had from this very poll. And what it has not done, however, was obviously he's trying to undercut some of the AfD, saying that the CDU can be strong on immigration. The AfD is unchanged at 20%. We saw also the sort of a bit of growth for the Greens and the other sort of parts of the political spectrum. So, Lizzie, really in short, what this has done, this is really seen as largely as a political blunder for the CDU, has really dented support for the CDU, hasn't really changed meaningfully in terms of who is going to be in the running. But what it has done, Lizzie, is created once again a very fragmented political landscape in Germany. This is, of course, part of the reason that the government fell. It's going to be harder and harder as these sort of votes dissipate and basically all of these parties converge around 20% to actually build a government when the time comes.
And if we can, Ollie, link the politics and the corporate dots, Tesla sales in Germany at their lowest ever. Do you think that there's a link to Elon Musk's support for the AfD?
Yeah. Yeah, so listen, Lizzie, I think this is really sort of an interesting to think about. I mean, we know that cars are fundamental to sort of every part of German life, whether it's in the culture and the economy, but also increasingly now it seems in the politics, because obviously Elon Musk came out in support of the AfD very, very aggressively a few months ago, and basically saying that the alternative for Deutschland is the only thing that can save Germany. Now it seems that maybe the Germans are looking for an alternative to Tesla, because what we are seeing is the lowest sales of Tesla in Germany since I think it was in July of 2021. That's a 59% plunge in the sales. And the reason that we sort of talk about it, Lizzie, and we say that maybe this is not just the EV market itself was up 54%. And what is interesting is we saw an exact same trend over in France. We saw in January, Tesla sales plunged 63%, in the UK down 12%. And when you ask a poll of Germans how they feel about Elon Musk, as you can see it on the screen there, about 80% of them have a very unfavorable view of Elon Musk, particularly after he weighed into politics. And we should say that part of the whole AfD's platform is they're very upset about the fact that the U.S. has so much influence over German politics that they were obviously very quick to embrace Elon Musk when he came to support them.
Driving Germans away, perhaps. Bloomberg's Oliver Crook, we thank you for joining those dots for us. Now, today, our colleague Tom Mackenzie is going to be speaking to some of Germany's most powerful business voices ahead of the election later this month. That's the Germany election CEO briefing today at 9 a.m. London time, 10 a.m. Frankfurt time. But coming up right here on Daybreak, the White House tries to temper anger and shock at President Trump's controversial proposal to take over the Gaza Strip. We'll bring you the details next. This is Bloomberg. The Middle East now. Aides to Donald Trump are playing down his proposal to, quote, own Gaza. That's after he suggested that the US should take over and redevelop the coastal Palestinian territory while displacing its residents to neighbouring Egypt and Jordan. White House Press Secretary Caroline Leavitt calls it an out-of-the-box idea.
The president has not committed to putting boots on the ground in Gaza.
Is the U.S. prepared to remove Palestinians from Gaza by force?
The president is prepared to rebuild Gaza for Palestinians and all people in the region.
Why not rule out the idea of committing U.S. troops? This has been a long-standing argument that the president has made really over the last decade or so, talking about endless wars and not something the U.S. wants. Why not rule out troops?
Because I think the president is very good when he's making deals and negotiating, not to rule out anything, because he wants to preserve that leverage in negotiations.
Well, the announcement was criticised by countries including Saudi Arabia, Egypt and France, but welcomed by some lawmakers in Israel. Let's get analysis now with our team leader for the Middle East, Paul Wallace, who joins me now. Morning, Paul. I mean, the job of reconstructing Gaza is going to be a massive one. I wonder whether there is going to be any of this that actually comes to reality. And if you could just take us through some of the reaction from the leaders in the Middle East.
Hi, Lizzie. I think it's fair to say that everyone was shocked by it, including the Israelis. There's little sign that senior Israeli officials knew much about what Trump was going to say, at least with any, in the sense that they weren't given much notice. And even Prime Minister Benjamin Netanyahu himself seemed a little bit taken aback when he was standing at the, next to Donald Trump at that press conference. In the Middle East, whether it's Arab states or Turkey and certainly Palestinian officials themselves, the reaction was swift and it was very negative. They say that this cannot happen, that this would be an injustice for Palestinian people if Gazans were removed forcibly from their homeland. And even some European allies of Israel and the US were pretty firm against this. As you mentioned, in Israel it's different. Certainly on the far right there was more optimism about those comments.
Okay, Paul, that's all we've got time for. Our team leader for the Middle East, Paul Wallace, we thank you. And coming up on the programme, it's BOE Decision Day. We'll have more for you next. Stay with us. This is Bloomberg. very good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. The US Treasury Secretary Scott Bessent says President Trump is not calling for the Fed to cut rates, with the focus instead on bringing down 10-year Treasury yields. Fed officials call for clarity. Donald Trump's aides look to tone down his call for the US to step in and own the Gaza Strip, calling it an out-of-the-box idea. Plus, the Bank of England looks set to cut interest rates for a third time today, but official growth and inflation forecasts are both expected to move in the wrong direction. Well, a very good morning. Welcome to Thursday if you're just joining us. And we can check in on these markets after a choppy session yesterday. The S&P managing to notch a second straight day of gains as investors tried to brush off some of their trade worries. But you've got the MSCI Asia Pacific Index there taking a breather this morning. It's around its highest since mid-December. And futures on both sides of the pond actually pointing to a higher open today. Flipping over to the cross-asset picture, you saw Treasury yields falling to fresh 2025 lows yesterday after that weaker-than-expected services sector data really fueled concerns about economic growth. The 10-year Treasury yield currently at 4.43%. Scott Bessent's got his eye on bringing that down, and we can discuss that more later. But gold also extending its longest winning streak since April, benefiting from the flight to safety, and oil weighed down by that tariff uncertainty. I've also put cable in for you there. $1.24 is where we trade currently. But of course, we've got this Bank of England decision coming at 12 p.m. London time, and the spectre of stagflation really hanging over those forecasts. Well, we can discuss this further now. The BOE, as I say, expected to cut rates again later today. But with inflation still above target and a struggling economy, what might the BOE say about its path ahead? We're joined now, I'm pleased to say, by Janet Henry, Global Chief Economist over at HSBC. Good to have you with me, Janet, this morning. A 25 basis point cut, I assume, is what you're expecting today. So how would the market react if we had a dovish surprise, say Catherine Mann voting for a cut or Swati Dinger, the archdove, voting for a 50 basis point move?
Well, absolutely, that is the risk. It's, I don't think anyone is expecting anything other than a 25 basis point cut today. But everyone's going for 8-1. And certainly Catherine Mann, I think it would be very interesting if it was, complete consensus if she voted for a cut, because obviously she's someone that's indicated that eventually a time might come for more aggressive cuts to come forward. Although I suspect she might still be a little bit nervous about the latest wage data. And absolutely, there is that risk of a 50 basis point, that one person votes for a 50 basis point cut. So we've already seen some shift in market expectations, now pricing in a little bit more for 2025 in terms of rate cuts. So I think that trade would get another leg on the back of a dovish surprise. I think that's where the balance of risks are tilted, despite, as you indicated, inflation likely moving in the wrong direction in their projections for the near term.
Well, you hint at that rapid deterioration in the labour market, Janet. I wonder how much chance you see of a March cut.
At the moment, we still think that is really quite low. I think certainly in the first half of the year, that it seems to be that they are likely to stick to the major meetings when we get the full forecast revisions, say February and May. So I think any move towards more aggressive cuts, which is certainly what we are forecasting, would be in the second half of the year, because in the near term, while we are seeing some growth risks, and I think the balance of risks is now looking through inflation towards the growth risks, actually, they know that there's going to be this near-term hump in inflation because some of the moves we've seen in energy prices and what's likely to happen in some of the data in the next couple of months. So very low probability of March at this point.
OK, but how much more stagflationary do you see the forecasts being than they were in November? I mean, it's not going to be pleasant reading for the Chancellor. Do you think that her supply-side reforms last week will do much to boost growth?
I think it will take time. And actually, for those that do get into the weeds in terms of the Bank of England's projections, we know that they're going to lower growth. Certainly, we think they'll probably lower the growth outlook for 2025 from 1.5 to a little bit below 1% to about 0.9. But they also set out their views on the supply side. How are they thinking about productivity? How do they think about how much slack there is in the economy? And certainly, if we do get an environment that's more conducive towards growth, towards investment, that makes consumers more confident to spend, because remember that household savings rate is still quite high in the UK, then that could be more conducive to an improving growth backdrop. But that isn't going to happen in the course of the next couple of months.
And just taking it more globally, of course, part of what has eroded the Chancellor's headroom is the market turmoil. Part of it, a global story, of course. How much risk do you think there is, or how exposed do you think the UK is to another shock like that?
Well, if we think back to what happened at the start of the year, while the shock, I think, did come from the US, we'd seen a slower pace of improvement on inflation, and we did see some increased concerns about fiscal sustainability across the advanced economies. Actually, the sell-off was obviously bigger in the UK and it was in Germany, because the US has got growth and the UK and Germany do not actually have growth. But I think markets need to be assured that public finances are on a sustainable path, which is why tweaking around the edges 5 years ahead in terms of projections doesn't necessarily provide the right assurance. They need to see stronger but also disinflationary growth, and they need to know that the public finances are on a sustainable path, which can often mean that action is needed sooner rather than later.
And just very briefly, Janet, how are you thinking about the impact of potential Trump tariffs on the UK, whether or not we're directly hit by them?
Well, clearly the US president has indicated that he hasn't decided yet regarding the UK. But I think in terms of the direct impact on the UK, yes, there could be some hit towards exports, but it's not like exports have been a major driver of growth in the UK. Actually, some of the bigger hit might come from if there is retaliation, because then there would be making goods more expensive that are imported from the US for consumers and for companies. So if there's no retaliation, it is absolutely a growth risk rather than both hitting growth and pushing up inflation.
And no one more aware of the growth risks to the UK than Keir Starmer himself, but in Donald Trump's good books for now. Janet Henry, Global Chief Economist over at HSBC, we thank you, as always, for joining us this morning. And we're going to bring you full coverage of that Bank of England decision when it drops at 12 p.m. London time. Viewers in the UK will also see full coverage of the news conference at 12:30 p.m. At 4 p.m, we'll bring you Andrew Bailey's interview with Bloomberg's Guy Johnson as well, so you do not want to miss that. But let's get to French politics now. The Prime Minister François Bayrou survived 2 no-confidence motions yesterday, finally ensuring the adoption of a budget following months of political turmoil. We can get more now with Bloomberg's Caroline Gonin, who joins us now. Caroline, how did Bayrou manage to survive here?
The new Prime Minister, François Bayrou, may have found this very, very, very narrow path to survive without a majority in Parliament. He survived, as you said, not 1 but 2 votes of no confidence last night, with just 128 votes against him out of the 577 MPs in the National Assembly. The hemicycle was actually almost empty last night. That's because both the National Rally of Marine Le Pen and the Socialists didn't show up because they decided to abstain. So after 6 months since the snap elections, the NFP left-wing alliance has finally exploded, and the Socialists breaking away from the far left, who were the ones who presented this vote of no confidence. That's because the new Prime Minister, François Bayrou, has included the Socialist Party from the very beginning of the negotiations on the budgets at every stages for the past month and a half. That's why they decided to abstain, and also he's reopened the Pandora box of the pension reform. There was also a lot of fatigue in public opinion, with 74% of the French who did not want this motion of no confidence to pass this week.
And Kathleen, what's actually in this budget and what's going to come next?
So there was a committee of 7 senators and 7 MPs from the National Assembly who came up with a compromise last week. No one was really satisfied with it, which actually shows it was indeed a compromise. In fact, the government themselves, they're saying that the motion of no confidence that made Michel Barnier collapse in December already cost 12 billion euros to the French economy because of delays in savings and also because of the lack of confidence from investors in the French economy since then. So in this budget, 50 billion of euros of savings are planned. There's going to be a new super tax on profits of big companies with more than 1 billion euros of French revenues. That's going to impact the likes of LVMH. In fact, Bernard Arnault, the CEO of LVMH, already complained last week in the earnings call saying we shouldn't tax French revenues and the made in France for this company. And in fact, the government decided to have this tax for only 1 year, make it temporary to not impact jobs at these big French companies.
OK, Bloomberg's Caroline Conan with the latest on French politics. We thank you for that update. And let's stay in France because we have some breaking news out of Pernod Ricard. Earnings dropping, surprisingly, this morning on the terminal. And we have seen them cutting their full-year organic net sales guidance with a focus on spirits here. So they are seeing sales by region dropping 7% in the US, 25% in China and 2% in Europe. The shares are currently down 6% year to date, nearly 7% in fact, so far this year. Of course, the spirits maker, a European company in the thick of the Trump economic policy, his tariffs. Will we see an impact there? But a downgrade to the outlook for Pernod Ricard. We're going to stay with the earnings story in the programme next. Volvo Cars dropping their earnings earlier in the programme. We're going to be speaking to the CEO, Jim Rowan. He'll join me next, so do stay with us. This is Bloomberg. Well, earlier in the programme, we had results dropping from Volvo Cars. A pretty bleak picture. Volvo warning of a tough year ahead after fourth quarter profit declined. And we can get into these results now. Go under the hood with Volvo Cars CEO Jim Rowan. Jim, thanks so much for joining me this morning. Back in the third quarter, you were talking about an accelerated weakness in most markets, including in the premium segment. I wonder how your outlook has changed since then and how you're looking at 2025. Thanks so much for joining us.
Yeah, you bet. Yeah, actually, the outlook hasn't changed that much since we spoke in the third quarter. Listen, let me unpack the 2024 year, because I think it's important that we look at the whole year and not just the fourth quarter in isolation. So what we're pleased about in 2024, we had some record results. We had record revenue at 400 billion SEK, the first time the company has ever reached that level of revenue. We had record profits at 27 billion SEK, again, the first time the company has reached that profit level. And then we also freed up $14 billion of free cash flow in the fourth quarter, 14 billion SEK rather of free cash flow in the fourth quarter. So that's a really positive view of the underlying operations of the business. It's really the market that is changing. Obviously, we're seeing some additional tariffs and we're seeing some turbulence that comes in the wake of that. So that's what I think we have for the year ahead. I think it will be rather turbulent, but I think we're pretty well positioned when you compare us at least to many of our peers to be able to ride through the storm, if you will. And that's because we have a nice wide portfolio of mild hybrids, plug-in electric hybrids, as well as EVs. And we have a nice range of cars in terms of 30s, 40s, 60s, 90s, SUVs, wagons, and so on. And we sell in 80 countries around the world. Probably the biggest thing is because we operate in the premium segment, we're a little bit more protected than the mass market segment.
Yeah, but Jim, you mentioned Donald Trump's tariffs. How are you specifically affected? I know that your ambition is to build where you sell. Are you already tweaking production plans to get around his tariff plans?
Yeah, so we started building our flagship EX90 in our Charleston facility in the USA. We have more capacity in the USA should we need to utilize that capacity. We don't get affected by the tariffs really from Mexico or Canada that have been muted. We have some sub-assemblies that come in from Mexico, but all of our production is in the USA or Europe or Asia. As you say, we have manufacturing facilities in each of those three big geographies of Asia, Europe, and Americas. I think the biggest thing that people are looking for is, will there be tariffs between the European Union and the USA, and that would be the bigger concern.
But are you going to move even more production to the US because of the tariffs?
At this point in time, we have plans to produce more products. We do two products there right now. We actually produce the Polestar 3 as well as the EX90 in that Charleston facility. Those are ramping up, and as I say, we have more capacity, so we're looking to see what other models we should start to manufacture in the US as we go forward.
And in the 2026 year, the US might also introduce this sales ban on imports of vehicles with systems designed or produced by Chinese or Russian entities. Given that your majority owner, Geely, is Chinese, how are you handling that threat?
Yeah, you refer to the ICTS legislation, which is coming in, so we'll get a good look at that. They've just released the summary documentation on that, so we don't have a full view of what that actually means and what the criteria is in order to continue to be able to sell cars in the USA. So we'll get a good look at that legislation in the coming weeks and be better positioned to figure out what we need to do in terms of any technical changes that we need to make to the vehicles. So that's one probably more for the future than for today.
But I suppose the big question for you for now is, can you convince the US administration that your tech isn't a security threat? Are you confident of that, Jim?
Yeah, as I say, we need to wait to see what that legislation actually says. The devil in these things is always in the detail. So we're going to take a deep dive into that. But maybe I would say, if you look at the auto industry, we're extremely well positioned to meet the requirements of each of the individual countries. We operate in 80 different countries around the world. All of those have different requirements in terms of connectivity or safety requirements or one thing and another. And we have, the skills and the experience to be able to modulate through those. So we need to wait and see what ICTS says in the fine print, and then, we'll act accordingly.
All right, Volvo Cars CEO Jim Rowan, we thank you, as always, taking us through those earnings this morning. And let's get to some more breaking earnings, shall we, this morning. Out of Italy, we have banker Monte de Paschi coming in with net interest income at €588 million, a beat on the estimate of €552 million, and fourth quarter net income coming in at €384 million, the estimate for €262 million. So another beat there. We have the shares so far this year down 7.4% year to date. So we shall keep an eye on those after those beats at the open. But coming up right here on Daybreak Europe, plenty more on the programme. So do stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. It's just gone 6:53 a.m. here in London. And of course, it is Bank of England decision day. 12 p.m. London time is when it drops. So let's set you up for it with a look at the UK economy as things stand. Because here we're kind of in between the euro area and the US, not just geographically, but also in terms of the growth picture, weakness, but in terms of inflation as well, picking up. And that is why unanimously economists are expecting a 25 basis point cut today. It's almost fully priced in by markets. And the expectation is that we get an 8-1 vote split. Same as the November decision, the expectation being that Catherine Mann, the arch hawk on the committee, is going to be the only one today who votes for a hold. So it would be a dovish surprise if she goes for a cut, or if the arch dove on the committee, Swati Dhingra, votes for a jumbo cut. But really, the focus is also on the path ahead. And the expectation is that the Bank of England is not going to ditch the line in the guidance that says a gradual approach to removing monetary policy restraint remains appropriate. So it would be a surprise if they were non-committal later on today. But this brings me on to the forecasts. If we flip over the board, there's perhaps going to be more focus on the forecasts if you are sitting in Downing Street, if you are the Chancellor of the Exchequer, Rachel Reeves, than on the decision itself, although a rate cut, of course, would give a boost to Rachel Reeves. You can see the Bank of England is expected to downgrade its growth forecast, but if we flip the board, economists on balance expect that the Bank of England is also going to upgrade its inflation forecasts. Now, I should say this is on an outdated market curve, a difficult job for Andrew Bailey when it comes to the communications. He's going to have to add that nuance in. But this is going to be embarrassing for the Chancellor potentially, given that her top priority is to grow the UK economy, and maybe her October budget has added to inflation more than initially thought. We're going to bring you this decision on Bloomberg TV with special coverage. 12 p.m. London time is when the decision drops. Viewers in the UK will see full coverage of the news conference at 12:30 p.m. London time. And at 4 p.m. we'll also bring you an interview with the Governor of the Bank of England, of course. Andrew Bailey will be sitting down with Bloomberg's Guy Johnson. Also later today, the US Treasury Secretary Scott Bessent is speaking to Bloomberg. That's at 6 p.m. London time, so you do not want to miss that conversation. He's already said that his focus is on the 10-year Treasury yield. We'll get more from him on that. And with just over 2 weeks to go until the German elections, Bloomberg's Tom Mackenzie is going to be hosting a CEO briefing with some of the nation's most powerful business voices. That's today at 9 a.m. London time, 10 a.m. in Frankfurt. The opening trade is coming up next. Kriti Gupta, Anna Edwards and Guy Johnson will be taking you to the market open. So stay with us. This is Bloomberg.